It's almost like, gosh, I wish somebody would have thought of that. They should probably call it like hub and spoke or something, you
There
know?
you go.
God, that would be an
Oh my
excellent.
God. I know a company in Florida called Hub and Spoke.
It's in, I think it's in Delaware
Yeah,
actually,
I think
but
it's in
Oh
Delaware
God
actually.
damn
I'm
it.
pretty
Fuck.
sure.
Cut that
Yeah.
out.
Yeah.
I tried. I tried. Greetings and welcome to Luck of Effort, where we strive to teach that it's not about what can happen to you, but what you make happen for yourself. Today, you can expect to find our normal acts of debauchery, expectations on where we think the economy's headed, where we think the stock market is headed, and ideas on how to take your business to the next level. And here we go. Greetings and welcome back to another episode of Luck of Effort. We are one man short this week. Nick is very busy going into Black Friday and Cyber Monday, but we have Jake, Kyle, and myself here to get this episode kicked off for you guys right here before Thanksgiving. A lot of stuff has happened. We're doing this once a month now. So much bullshit. I don't know if anyone's surprised that doesn't love crypto, Jake, but there's some stuff going on in that space with FTX and Sam Bankman-Fried. You just want to start there and enlighten us on what's going on. I have some banter, but I know you're going to be able to dive deep into it for us.
Yeah, oh, totally. First of all, great intro, Austin. Great substitute. I like that a lot.
Uh-oh, I'm kicking Nick out. No.
Nick might be shitting his pants after he sees this thing.
Run for
This
his money.
episode. No, but yeah, big news over the last month. I like kind of a sidebar, but we do these every month now instead of every week. There's really a lot more stuff to talk about, and I kind of enjoyed that. And I think
Agreed.
we discussed doing them longer intervals, and I just thought that might have been even too much time in between because we wouldn't really be able to discuss a lot of stuff because there's just so much that goes on. But yeah, over the last month, particularly in the markets and whatnot, crypto especially, a lot of shit has gone down. The second biggest exchange in the world and the first biggest exchange in the United States, FTX, basically blew up. They went insolvent, as well as their research firm. Even though they say that they're not connected at all, they really were. Alameda Research, they all blew up. Funny thing about FTX was at one point they were valued at $32 billion, and that was absurd. And then like either last week or the week before that, their new valuation was less than $1 billion. And I saw a funny meme. The guy who owns FTX and Alameda, his name is Sam Bankman-Fried, just go by SBF for short. His net worth was 30 some $billion. And there was a post on a Bloomberg or from Bloomberg talking about 2021 whatever date his net worth was X billion dollars, and then it had like current net worth, it said like -$3 or something like that. And that's just I just think that's a massive event. There's a lot of people lost a lot of money. Tom Brady, I saw for one, said he had a $600 million fortune in FTX, and it's just $0 now. So, there's been other stuff that happened. Austin, I can't even hear you.
Sorry, I was on mute. Was
Oh,
he
you're
an
good.
investor or did he just have a portfolio on FTX?
I'm gonna guess that he was a paid spokesperson as well as a partial owner of the company, and
That's
I'd
right.
assume he probably had a portfolio on there because
As
they
well.
had the commercial. He was golfing with what's his face. Um,
Oh yeah.
and he's like, "No, I'm not just making a trade. It's crypto, bro." I'm like,
The
I
grift
saw that.
runs deep.
Yeah, exactly. It kind of comes at a time when I mean, Bitcoin was already like $20,000, and all of a sudden, this big news of, obviously the largest U.S. exchange. There's some shady stuff going on there. They're using customer funds basically to fund their degenerative trading without stop losses and just this endless loop of loans and swapping with their research. There's just a lot of shit that
So
went down.
ballsy. He thought he was God
Dude,
doing
it's not
stuff
even
like that.
ballsy. It's just stupid. And he got all these fucking people to back him. Dude, his parents are both compliance lawyers. And
Yeah.
he's still doing shit like this. And, there was a quote from Kevin O'Leary. He's like a partial owner as well as a paid spokesperson. He said basically the same thing. His two parents are compliance lawyers. There's nowhere that I'd feel safer parking my money. I'm like, dude, you even know what they do?
Yeah. That's kind
Like,
of odd that was the confidence he needed, though. You know what I
yeah, I
mean?
mean,
Yeah,
just kind of like,
it doesn't seem like a good idea or like a good reason.
It's a terrible reason. Oh,
Good justification.
I'm gonna invest $100 million. I mean, his parents are compliance lawyers.
I mean, I'm sure that's not the entirety of the situation. Like, they had a decent business model on the face value, and they're doing like cool innovative stuff. But eventually it comes out that their accountants and auditors were in the metaverse, and then you realize that
That's right. They literally had
Yeah.
an office location in the metaverse.
yeah, I'm
Yeah.
sure they weren't taking complaints to that office either. So.
Yeah.
You have to have a Quest 2 to complain.
Yeah, I mean, it was just crazy.
It's like C&M.
Yeah.
Oh
Hey, you
yeah.
guys can get away with it.
Yeah, no, you can do stuff with that, but I
Macro in the
wouldn't say.
metaverse with CNM.
Yeah, I don't think there's a distinction for auditors. Whether it's
No, I
on
don't
the
think so either.
internet versus in an office building, in New York or something. But I digress. But I was thinking that I saw some stuff on Twitter. I've got a great set of following on Twitter. I follow some great guys in the markets. All different types of markets. So if you want to follow me, and I retweet all their shit all the time. But
Content.
yeah, oh yeah, there was like maybe even like 2 or 3 months ago, there was some stuff coming out just questioning the solvency of FTX and some other exchanges. There's also there's some news out now that Gemini might be going under. There's a lending platform called Genesis that's about to blow up. I don't know if you guys have heard of Grayscale. I mean, you probably have. Grayscale, some shit has been happening. They've been, their money was in custody of Coinbase, and they can't even tell you like the exact location of all their money.
Insane.
And then, if you're a traditional market investor, equities and whatnot, they've got their GBTC and ETHE for Bitcoin and Ethereum. Their GBTC pair was trading at a 50% discount from the actual price of Bitcoin. So a lot of shit's been going on there. The main point is their proof of reserves are basically, they can't
prove
show those. They can't prove it. They got no proof.
No proof of reserves.
So, I mean, I think just at this point, it's been a shitty market for the last year, aside, from trading.
What's interesting? I think the psychology of this market is really wild because you said 2 or 3 months ago stuff was coming out about FTX and some of these other insolvent plays. And I saw one of the guys that was one of the big proponents of like saying, hey, let's look into this. And everyone was like calling him like a fraud. And they were like, oh, bullshit. You don't know what you're talking about. And then he tweeted like whenever the SBF stuff came out, he was like, I told you so.
Yeah.
And now he seems like a genius. And when everyone believes something, it's so okay. But then right when someone digs under the surface and like, oh shit, there's a problem here, then everyone's like, oh fuck.
Yeah. I mean, to be fair though, like, it's just such a gray area right now as far as like, exchanges and like the differentiation between like a centralized exchange versus decentralized. And also the market is just, I wouldn't even call it, it's kind of new. I mean, it's like 14 years old, but like, it moves the same as, traditional markets. It's just more exaggerated. Like, and this like news and stuff that would normally, slightly affect a traditional market, it does impact these markets. And there are crypto specific news that impact, a lot more. And obviously this is one of them. Luna and that collapse in May was another one.
Hmm.
3AC and all that. So I mean, it's just a it's just an interesting time.
So
We'll
what do
still
you
have to
think
see.
happens? I mean, there's a lot of grift. There's a lot of things that are going to continue to come out that are terrible, and a lot of people are going to lose a lot of money. But do you think the technology is going to stay around to be relevant? What do you
Yeah.
think the
So
future of crypto
just hear me
technology
out.
is?
I I think that this period, maybe like, another 6 months or so, all the like quote unquote bad guys or people that we don't know are bad right now, they're they're gonna get they're gonna get destroyed in spite of the fallen soldiers, as you want to call it. Like, Do Kwon and those guys at Three Arrows Capital and Sam, obviously. Um, so, we'll probably there's gonna be like extremely low volatility in the markets as now after this big debacle, even more skepticism is filling the market. So people that
Right.
are participating right now may exit, or people that want to participate, they will postpone their time frame or push it back to maybe the macroeconomic or geopolitical environments are different than they are now. But ultimately, it's not going anywhere. It's not.
So you think it's going to stay around
Absolutely.
with the main protocols, Bitcoin,
Absolutely.
ETH?
There's some
I would
papers and
agree.
stuff out there that talk about, even from just like financial planning and wealth management standpoint, that you know cryptocurrency provides aspects to a portfolio that you will not be able to get anywhere else. You
Could
just
you
need to.
elaborate on that? Like putting
Yeah,
1% of your net worth
it's an
into it?
extremely
Or,
high. Well, okay, that's debatable. There's people that have all their money in cryptocurrency and they've obviously done well. And
sure.
there's some guys that I know who've done that and did well. And if they were smart, they sold. Some of them did. Some of them didn't. Uh, but like
Sell
it's an
for gains.
extremely high beta asset. Um, so returns are magnified greatly in quote unquote the bull market, or whenever you position yourself for such a market. And obviously it moves in cycles, as I think we've talked about before. But yeah, I mean it's got a lot of volatility. So if you're younger and you want to add a portion of your portfolio to a more volatile asset, you know, with more volatility comes potentially more returns always. So,
Okay,
you
so you're
know,
saying from a younger financial perspective or younger age financial
yeah, I
perspective or
mean,
financial planning, get in. And then maybe
right.
if you're older, still get in, but allocate funds differently. Just
Sure.
because if
Or
it starts to pop up,
yeah,
there's going to be
exactly. I
some big
mean,
gains.
if you allocate 1% of your portfolio, let's say, you're a retired person, maybe you're like, let's call it like 50 or 55. You're probably not gonna want to like have a large portion of your money in any cryptocurrency at all. Um, but throwing 1% of your, couple $1 million in is not going to kill you. It's not going to be the be all end all, right? It's obviously very volatile. You're going to get bigger drawdowns, but historically, the returns are there, and they're something that anybody would like. Annualized returns on Bitcoin are crazy,
What would you
and
say to
Ethereum.
people? Oh, sorry.
No, that was it. You go.
What would you say to people that are like, oh, this match tulip mania? You know, those graphs that were on Twitter, like Fin Twitter all the time?
Oh,
Like, look, it went up and then it's going to go down. Do you think it's going to follow that same trend? Or like, I know you're saying you think it's going to stay around. So you think we're going to level off at Bitcoin at like 10,000? Do you have any price projections at all?
yeah. I mean, I think the nature. Just take a look back if you have the time. Take a look back at like the S&P 500. In the early 1900s. When it was or late 1800s when it like first was like really monitored because the environments were a little bit closer to where they are now.
Hmm.
Even the S&P 500 fucking moved ridiculous amounts you know in short periods of time, or relatively short periods of time compared to the scope of the market. But um I do think it's probably going to do the similar thing for a few more years until obviously there's more regulation. There's less manipulation, because there is manipulation in all markets. They don't like to call it that. It just is what it is. But
Yeah.
the 1,000% up move followed by 85% down move. You know, it's going to happen in a new market with mainly speculators in it. They speculate, and once all the speculators combine, and there's a lot of built up long positions, and no one's really deciding to sell. The market's going to shoot up until they decide to sell, and then speculators leave, or exit most of their position. It comes back down, and that's just what happened. What's happened in the past? 1,000% move is followed by a 90% move to the downside, and it's
And then
still
you
higher than
consolidate.
when it was, right?
Exactly. Yeah, you
You know,
consolidate at that new level.
exactly. So, I mean, as far as a potential price prediction, again, this is not financial advice, but I'm not gonna lie. I said like anywhere between 10 and 15K is probably not a horrible spot to like start buying.
Yeah.
Again, risk tolerance, risk management is key. So if you have some extra, port potential allocations in cash that you'd like to throw into your portfolio, you might as well start potentially adding some cryptocurrency. The big ones, obviously, Bitcoin, Ethereum, probably first, and then once those start moving, you tend to get the movement of the smaller coins.
Altcoins. Yeah. Yeah, I like
But
Bitcoin at 10. That's not terrible.
I think, I mean, but again, you don't want to be that guy who like says, all right, I got all my bids set at 10,000
Exactly.
and it doesn't get to 10,000. You're just, you see another, 10x to say, let's say it goes to 100K, you're missing out on that. So I would say at this point in the market, with all this contagion and all this negative energy, all these, things coming out about bad people that have a lot of greed, because that's all what this is derived from is greed. Simple as that. I'd say,
Yeah, 100%.
10 to 15K, maybe you sporadically add more in that range. When we start to see some macroeconomic indicators changing for the bull instead of the bear, and you get like some stabilized price action for a couple months, maybe 6 to 9, then you're probably positioning yourself
Ayo.
great for
I'm sorry, I had to.
59.
Great for some plays.
Yeah.
Let's move to, I know we don't usually do investor corner at the beginning, but since we're talking about the markets, have you seen the Dow Jones moving up 18% in the last month?
Oh
What
yeah,
the
it's
hell
like,
is that
what is it?
about?
It's like, was it like 5% off all-time highs?
Yeah, literally like 5.5.
Yeah, kind of
Kyle,
crazy.
yeah, you have a take on that? End of the year, what's going to happen? Are we going to stay at these levels, or?
I don't know, to be honest. Everybody was kind of waiting for the Fed meeting today, or I guess it wasn't even meeting, but for
Just the
their meeting
minutes.
notes. Yeah, for the minutes, right? And the minutes did indicate somehow, um, some lessening yields, some lessening rates, possibly smaller hikes in the future. Whatever, I guess would be my
Yeah.
my thing on that. That just because they do a half point rate hike next time doesn't necessarily mean that we've solved the problem, like not even remotely close.
Remotely, yes.
So it doesn't really, I just think it's hilarious.
Well, hear me
that
out.
people are excited about that. But
Yeah.
That's my take too.
and then going
Hear
into
me
the
out.
holidays, I think we have a lot to wait and see as to what happens. Retail earnings, projections and stuff came out the other day. They were all pretty positive. I'm not 100% convinced that it's going to be as good as they think, but we'll have to see. I mean, did anybody see Target's last earnings call? Right, they missed by a decent margin, to say the least.
Wasn't it
So
like 15% or 20%?
Yeah, I thought it was like 10 to 15, so it's pretty nuts.
it was massive. So, I through the end of the year, it wouldn't surprise me if we stay even or maybe rise just a little bit. But once we get done with all this hype and Christmas and all that type of stuff,
Yeah.
I think it's downhill from there. I think next year, 2023 is going to be a rough year from a macro perspective.
I would agree with that.
For everything, by the way,
Yeah.
traditional markets and crypto and just any asset valuation, it needs to be compressed and stuff. We got a long way to go.
I think like historically though, we're in like December is usually like a pretty green month for the markets.
Well, of course it is. I mean, people are spending money and whatever.
Yeah.
So
You
Well,
know.
as Kyle said, that hype, like people are gonna be like,
Yeah.
oh,
Yeah.
spending's up, blah blah blah.
And, well, and
Less
the hype.
lower rate hike.
Keep in mind, the hype is going to last through Q1, right? Because all the money that gets spent in December doesn't get realized or publicly noted until the first earnings call of the year. So, that's going to carry us a little bit through March, basically. Or at least at the end of March, we'll get a little uptick, a little reprieve. And then if those numbers are bad, I mean, that'll
All downhill
be
from
it.
there.
Yeah.
Lights out. No,
Yeah,
I
and
gotta.
I'm also I want to throw this in real quick. Sorry, I know I've cut you
go
off like
for it.
twice now,
No,
Jake,
go
but
for it. You're good.
I want to throw one more thing. I want to throw one more thing in here on the inflation numbers, since this kind of goes back to those Fed meeting minutes.
Mm-hmm.
I'm really liking the theory. I didn't come up with this, but I'm really liking the theory of the little bit of a bounce here in those CPI numbers. They went down. What was it, like 0.2?
0.5%. Yeah.
They came in at 7.7 instead of 7.9, I think was the last one, right?
No, previous month was 8.2, but the projection was 7.9.
Oh, projection. Okay, that's right. We beat projections by 0.2. I think that's going to bounce. I think the Fed is going to, talk all this talk about lowering the rate hikes, and then we're going to see another print. I don't know if it's going to be this year or early next, but we'll see another print. It's going to go up again for a bit of time. Everybody's going to get freaked out by that.
That's something that we did talk about on the Crestview Magazine Markets in the Metaverse podcast.
Which one? The number one or two, so people can reference
second
it.
one in particular.
Number two, yeah.
But you should probably listen to the first one either way.
Sure.
Wink, wink.
You can find that on the Luck of Effort channel.
Yeah, Luck of Effort YouTube channel, or the Crestview Magazine YouTube channel.
Yep.
Do it through ours so we can get the algorithm in our favor.
Yeah,
please
exactly.
And thank
you. Okay, here's what I was gonna say, Kyle. That's a great point. I like that you mentioned that. The minutes did say that they were thinking about potentially reducing the velocity at which they increase rates.
Yeah.
However, you guys know who Stanley Druckenmiller is?
Yeah, for sure.
Yeah, he's like one of the greatest investors / money managers / traders of all time.
Word.
He, I saw a video on Twitter. This great follow who I retweet all the time. So again, go follow me. It was like a 1.5-minute clip. And basically he says, and it's pretty much, if you're in finance, that once inflation is over 5%, you're going to have to raise interest rates until the yields or until the rates, are between 5 and 7%. And also once they're above the inflation rate, that is when you can attempt to ease off a bit. And the fact that, markets, they're rallying right now. Obviously, historically we rally in the end of the year going into, holidays, end of the tax year, whatnot, whatever you want to call it. The Fed is still in QT, quantitative tightening. It's not, QE infinity like we had in, after COVID anymore. So again, we might get 50 basis points instead of 75 in the next meeting. But again, the Fed some of the guys that speak at the Fed did raise their target interest rate levels from, 4.25% to, 5%. So, the size of the rate hikes may not be the same, but yes. I think that they're thinking that these rate hikes are going to last longer.
I think it just prolongs the problem, does it not?
Yeah, exactly.
I mean, this is not my area of expertise by any stretch, but it seems to me that just doing smaller adjustments for more months, right, or more quarters, however you want to look at it, doesn't necessarily solve the problem much differently than doing larger hikes, more often.
I think about gauging market sentiment.
Exactly.
They don't want to freak out everyone that much. And then if they have a lower print and a lower print,
but if they're trying to kill
rate,
Yeah, but if we
They're
need to
just
kill
they're going to get there, but it's
demand,
going to take longer. Yeah,
but we
that's the
need to,
goal.
right? But you would think that they would just do it, right?
Well, because the longer inflation remains elevated, the more sticky it becomes, and it's harder to bring it
Yeah,
back down.
I don't
totally.
disagree. I'm just saying I
But-
think that's why they would have these smaller tranches to
I
get
was
there,
gonna
even if
say-
it takes 2 or 3 extra months.
Yeah, I was
But
gonna say they eventually at first they said that they weren't gonna have to hike rates until after like March or February of 2023. Now they're expecting May, 25 basis points. But I like that you mentioned that, Austin. The market sentiment, right? Powell, looks at that heavily because he doesn't want to necessarily freak you all out. He kind of like plays with your emotions a little bit. He'll say like something that's like extremely hawkish at one, and then the next one it'll be like, oh, we're gonna hike still, but it's gonna be slower. So he'll surprise you with something. But I think that if there was a higher inflation print in the coming months, that it might be over for the markets. Maybe not over, but it would be. It would.
well, I as you guys
Something
said
that they
already, or
wouldn't
Kyle said,
expect.
take it into the end of the year with some green. Q1 number is going to come out either on par or low, and then plus everything else in the interest rate environment, markets are going to tank.
Well, yeah. Also, you got.
I would stand true to that point of view.
I've got one more thing. You also got to realize that like the Fed is actively looking at some of these economic data that's coming out, like jobless claims, and stuff like that. So they're actively trying to get these numbers back down. So there hasn't really been like a huge jump in like unemployment or nothing like that, and they know that. So I think that that's got to be something that happens before you can go into any sort of QE phase. And I think that they know that as well, along with some other like growth indicators like maybe the PMIs and whatnot, some of the core stuff, and some of these inflated prices of some of these commodities and whatnot, and things like that. So that's another thing to just keep in mind.
You want to talk about the Dun and Bradstreet Street report real quick?
I was actually
Since it
looking
kind
at
of
that.
correlates to what Jake was just saying.
Figure that would be a solid transition.
No, very solid. I don't know where you guys wanted to start, but I'm seeing
so just tell me what you think of it, because I've now read I've read articles from third-party sources, right? Not from Dun and Bradstreet, but read articles about the report on both sides of this now. Some saying it's positive numbers, some saying it's negative numbers. So what do you think?
I'm looking at the graph, the purple graph, and I guess we're not doing screen share, so I can explain it. So there's 6 sectors as manufacturing, real estate, construction, retail, business services, and trade, transportation, and utilities. So the things that are up, job health wise, retail, business services, and construction. The things that are down, manufacturing, real estate, trade, transportation, and utilities. For me, what that signals, and I'm very curious your guys' take, I could be missing the point, but for me, that's saying these extra services are doing well, like extra spending. So retail, so going and spending on in the holiday season, you're getting ready for the holiday season. Business related services, so new business, and then construction, so new construction, build, stuff like that. People are still in that mindset, at least writ large, and I think that plays into the first graph of the payment delinquency, credit card delinquency, and then credit card use. Like credit card use being up, I think that's to pay for some of these retail related purchases and then some of the construction items. So that's just what I think about it. That's my observation. So what would you link the manufacturing, real estate, and trade, transportation, and utility jobs being down, or less interest in that side of things? Do you think that's because they're getting filled, or they're just not available because there's less demand there?
I mean, I think that there's less demand for sure, but again,
that's what I'm thinking.
That might not be the only thing going on. Again, I might not know exactly why. I mean, again, we probably know retail, business services, and stuff like that are up because we're going into this spending season, quote unquote. Thanksgiving. You buy all this shit.
Well, and out of COVID, right? Like people want to start new businesses when they're like, oh, COVID's over. Like, I'm not afraid of not having a market anymore or whatever.
Yeah. I mean, I just think that some of this, I think certain sectors or quote unquote, whatever you want to call them, have a better indicator of the overall market than others. Like I wouldn't necessarily consider the retail or, business services to be like, you know, the main factors to look at when in terms of determining the overall health of, you know, the economy. I'd have to say probably manufacturing and like trade and utilities and whatnot probably more impactful. Um, we see those are going down, and that's kind of where more of the heavy hitters, pour their money into.
Yeah,
Um,
that's true. So we would have to ask the question, right? Like, is this US job health chart saying that the jobs are going down because they're being filled, or there's less available because there's less of those heavy hitters putting money into those industries? So
yeah, that's something that we just have to ask or somehow figure it out.
figure
But
out
again,
some
like
more info on.
credit card
But
delinquencies down 11%. Like,
that's pretty substantial.
Well, there's one way to look at there's two ways to look at that, right? I mean,
Yeah.
so look at the payment delinquency up 0.5%,
half a
right?
percent.
And
Yeah,
if credit card delinquency is down 11%, that tells me that the payments that are delinquent are to vendors, not charged on credit cards, right? But they're on
Right.
term sheets, basically, right? You have net 30 with your, your
yeah,
meat vendor if you own a butcher shop or something, right? And so on and so forth. So my cynical way of looking at that would be they've maxed out their credit cards, right? And they're now using term sheets to cover the difference.
sure.
So as you pay those credit cards down and on time, that's why you see that 11% going down. The payment delinquency, that's why you start to see that going up. And the credit card use is already pretty high, but it's still up 5%. And
Yeah.
that's residual from people
Yeah.
using those, you know, to buy stuff, obviously,
I would
Sure.
so I
for
would
their
say
business.
people aren't underwater, but they're definitely using other people's money more. That's that 5% credit card usage up year over year,
Right.
to make purchases going into heavy season with the holidays, or depending on what their industry is. So
Yeah, I'd say we
um,
just have to keep an eye out for future delinquencies as far as like, maybe December, January, February.
Yeah,
yeah,
we'll just
that
have to see.
delinquency number is going to be big, I think, month
We'll
over
And
see.
month compared to year
if
over
you go
year.
if you go down to the last chart too, the US overall business health index, again, it's still up, right? But it's not like from year over year. I guess it's up, or what is that, since 2000,
Well,
2010?
Well, I mean, look, delinquency is up,
yeah,
viability is
delinquency
down,
is
and the
up.
total loss is up,
Right.
right? I
Yeah.
mean, that paints the picture that I'm seeing, quite frankly.
Well,
Yeah,
and that shows higher risk. That's what lower on that chart
absolutely.
means as a percentage basis. So that
Sure.
Right.
white down arrow in the middle is definitely not a good thing.
Yeah, no. High risk,
And
as
so I'd
far as
say
the
it points
business.
to that point as well, Kyle, that you're
It's
making
all
about
balance sheet
businesses.
risk,
Yeah,
right?
yeah,
That's
exactly.
that Dun and Bradstreet. That's really what they focus on is, the balance sheet side of businesses, right? They're a credit reporting agency. So, and, for loans and things like that. So,
Mhm.
um, I mean, to see the viability going down or, companies falling into that high risk category or higher risk category, whatever, is not excellent.
Well,
Not a good
Not
sign.
going
I
into
honestly,
the macro environment that
right.
we think is coming.
I honestly think that this will this probably will have to come down significantly. I mean, just think about it. Nothing is really blown up really yet. Like every other recession, like big companies blow up. You know, because of some of the stuff they talk about in here, balance sheet risk, um, and credit and the way that their money is working. And I mean, aside from in real estate, that one like Evergrande, I don't know if they even
Mhm.
blow up. I think they got bailed out, but nonetheless, beside that and some of this crypto stuff, which again is kind of separate, I'd still say, even though it's not, but I'll I won't explain that. I think that some of this balance sheet risk is going to come back and bite these companies eventually. Just don't know when. Like I think it's got to.
What do you
I
think
mean,
happens if that occurs? Do you think that would happen to smaller businesses so it would boost larger corporate profits because people would then go to them? Or
well,
do you
I
think it
mean,
has a different
for
longer term
I mean,
effect?
small businesses, right? I mean, it can only do so much, for a small business. Like But some of these big businesses, we don't know what exactly they're doing or
Well,
who
fair. I mean,
they're exposing themselves
FTX
to.
is a good example, even though it is in the crypto space. I know you're saying it's
Right.
separate, but
I mean,
yeah.
but look at like Enron back in the day.
Mm-hmm.
I mean, they did some shady shit, and they were like a fucking $100 billion company.
Yeah, large, very large.
You know, they did so
Did you
much bad
see?
stuff. Banks.
Speaking of Enron, did you see that the guy who's taking over FTX as the CEO or
Yeah.
you know restructuring officer or whatever they're calling
Oh
him?
yeah.
He had that comment that FTX was the worst example of corporate what did he
Corporate
call it?
structure had
Corporate
the
like governance and stuff that he's ever seen.
yeah.
Mm-hmm.
I did
After
see
working
that.
on Enron,
After working on
Right.
that's right. I
Yep.
just
isn't
thought
that
that
the
was kind of
guy?
funny.
He's also the guy that did stuff with illegal online gambling schemes, but I
Yeah,
could be
no, he
wrong
did
there.
he did the restructuring for that too. There was a
Yeah.
scandal that happened. Yeah.
Yeah.
So maybe FTX is on the up and up. No,
No, definitely not.
I'm kidding. Um,
But
I have a
I
funny
mean,
tweet as a segue if we're ready for this. Or did you have any more points to make, Jake?
no, I mean,
Okay.
just keep this in our mind.
Oh yeah, these are great things to keep in mind. One thing that's living rent free in everyone's mind is Elon Musk right now. He did this tweet where it's that guy who has the Dos Equis and he's like sitting like this, and it's like I don't always do X Y Z. So the picture says I don't always complain about Twitter, but when I do, it's a tweet.
Yeah.
And so everyone is bitching and complaining about Twitter
That's awesome.
being terrible, but where are they doing it at? On the damn platform.
On the
So
damn
I
Twitter.
think that's absurd. I mean, good for Elon getting all that traffic, but how do you guys view that? Do you think these people that are complaining are going to leave and it's going to hurt Twitter, or do you think they're going to
Absolutely
stay on?
not. Absolutely not. They're not going to leave. There's nothing out there that's like Twitter. Nothing.
Period.
This is where people go to like basically bullshit.
Yeah.
You can't do it really anywhere else. Instagram, you got to post a
Right.
picture. TikTok, it's a video. Like this is literally again like supposed to be digital town hall. People post and whatever they want. For if it's something reasonable or nothing like
Well, but you can't
out
say
there.
something reasonable. I mean that's the whole argument is what's reasonable.
Well, exactly.
Yeah,
I'm,
but
I'm
you were
talking.
saying
I'm
within
talking
reason,
like
you can post
within
whatever you
reason.
want. Yeah.
That's what I meant. But like
So-
that's where all these people go, and they're everyone's like, oh, let's boycott Twitter. Let's leave. Let's leave. See how long they're gone for.
Yeah.
Let's see how long they're gone for before they come crying and asking Elon to give them another chance.
I
Let's
saw
see.
this other funny tweet. It said, I'm deactivating my account tonight at 11:59. And then someone, I don't remember the exact meme, but someone said, so you went to Twitter to explain you're deleting your Twitter account to see what the response on Twitter was about you leaving Twitter. And it's just like this funny, like revolving door, like get the fuck out. If you don't want to be on a platform, no one's making you stay.
Right.
And Elon said, hope all judgy hall monitors stay on other platforms. Please, I'm begging you. So he's just trolling everyone, and I think that's hilarious.
Well, you know what I
but it's
did think
funny,
was
man.
interesting,
Uh-huh.
speaking of people using it, right, was when they reinstated Trump, which, by the way, he did by popular vote, which I thought was hilarious.
Do you want
So funny.
sidebar? Do you want to know the reach on that poll?
Yeah, what was it?
It was like 140 million people.
Yeah, that's what I saw. 142 million.
That's
Insane.
crazy, isn't it? And it was almost 50-50. Not
Yeah.
quite. I don't remember exactly what it was. I think it was like 52-48 or something.
Yeah.
But that's nuts to me.
What do you
But
think
anyways.
the repercussions are?
Well, that's what I was getting to. Trump has said that he's not going to come back.
He's going
And
to.
he gave a plug about Truth Social in that same interview and stuff. I just think it's kind of funny because that he'll be back. He 100% will be back. He's got like 5 million followers on Truth Social versus his 70 million or something crazy on Twitter.
Yeah.
So, I just thought that was interesting. We talked about that last month, I think, as to whether or not he would come back if he was given the opportunity. And I think most of us said yes, he would. So the answer to that question is initially he's not going to, or he doesn't want to. but I still think he'll be back
Well,
eventually.
think about why that is, though. Like I think on the last podcast I said 100% he'll be back as soon as he can, and so I was wrong. But he's doing it to build up conversations like this, like, oh, when's Trump going to be back? Like getting people excited, and he wants to plug his thing to see, okay, if I hold out, are people going to move over to my platform where I have more reach and say
Right.
or not? And then if they don't,
I
he's
just don't
not
think
going to
so.
just go. I don't think so either. I think
I don't
Twitter
think
is
so.
very
I don't think
quickly
anybody
becoming.
really cares anymore, to be honest, you know?
Yeah,
I'm
I agree.
well, I'm not I'm not gonna
Yeah, watch what you say,
I'm
Kyle.
not gonna say that. Yeah. Yeah. So we can move on.
I was just gonna say, like, I mean, again, like you guys think, I think he's gonna be back eventually, right? Especially, now given that Elon Musk owns Twitter. I know they were asking the same thing before, even with, old management. Like, if he potentially comes back, would he actually come back? They didn't like him, the previous management, so that was less likely. But if that chance was there, uh, and Elon wasn't the CEO, I think that even if he did get, brought back, he wouldn't want to rejoin. But given
He being,
Donald Trump,
oh, you don't think he'll come back?
no, I'm saying if Elon Musk wasn't the CEO and
Oh,
they said like, hey, you can come back, I don't think he would have. But
I
now
agree.
all this work that Elon has been putting in and will put in, I think it's for the good for Twitter. So I think that eventually he's going to come back.
I have a
And
counterpoint to that, though.
I don't think it's necessary for him to put all this effort into this Truth Social, because I mean, it's just not the same.
But here's my thing. I don't think Trump's going to go, oh, it's so noble what Elon Musk is doing. That's not going to be the reason he comes back. He's not coming back now as a marketing stunt. He will come back
No.
as a marketing stunt. So it all comes down to where he can have the most reads, get the most eyes, and get the most money. That's
Right.
bottom
Yeah.
line. I don't think it has anything to do with nobility.
No, I would agree. And he's not doing so hot, at least in my opinion, on the marketing side right now. I thought his speech, or to run for president, was it was a little bit weak. It was lacking a little bit, and he did it in his house, basically, right? So I don't know. It's very far ahead of time. Most people wouldn't announce their candidacy for president for a little while, to say the least, right?
He's just dropping the bait out, see what'll hook. So
Yeah.
Let's set a prediction date and we can reassess in a month. But when do you guys think that Donald Trump will come back to Twitter? Say a date. I have mine. I say January 6th.
Yeah.
Think about how colossal that would be. That would be a smart marketing stunt.
2 years to the T.
To the T.
That's not bad, actually. I'm gonna go with the over, so I'll say later.
Okay, later.
Yeah, I'm gonna go later as
You
well.
think later? Okay.
Yeah, because I mean, I'm trying to remember when the appropriate time is, but most people don't announce their candidacy for president
I was gonna say like till the year,
until like
2024.
Yeah, like maybe 14 months before the election date. So like maybe next summer. So I think maybe when everybody else, whoever that ends up being, is announcing their run for candidacy.
Okay, I see.
I think at that point the marketing gets slightly more competitive, and that might be the time that he really needs to pony up and decide what he's going to do.
I mean, I think it should pony up beforehand if that's the case. But that's definitely
the thing
a good
is,
perspective.
I really do think that the chance of Trump winning the presidential election is very small. I mean, basically none, right? So, I mean, we just, I don't know. I don't think it's going to happen. So I'd like to see other people run, and from the Republican side, right?
Mm-hmm.
And see if you can get somebody else in there. So
I will be running as a libertarian.
You'll be running
as a libertarian.
Oh,
I'll take 3% of the vote. No,
it's more than most people.
Yeah. So, did you guys have any other topics? I'll just throw a plug in while you're thinking for the Taylor Swift and Ticketmaster thing. Kind of nuts, but that's something that us, I guess, call it sports fans have been dealing with for some time, with the monopoly that Ticketmaster and their parent company have on that space.
Who's the parent company? Just out of curiosity, do you know?
I don't have the name. throw it in the show notes or throw it like up on the screen. I don't have it in front of me.
Okay.
But they bought out all of the smaller ticket companies. So they basically have like one or two competitors. Jake mentioned one of them, I think, earlier.
It's like StubHub and like SeatGeek. I mean, I
Well,
don't even know if
SeatGeek. I think
SeatGeek, I think collectively aggregates prices from all of the
yeah.
like
I
ticket
like
sales.
business models like that. Not to take a massive tangent, but I think that's where a lot of businesses should go. The aggregation plays of like not being Uber or Lyft, but being the
Well,
company that takes them to like an airplane platform. You know how like Delta, United, Allegiant all have their own airlines, but then you have TripAdvisor that doesn't have an airline, and then they make that arbitrage between.
it's
ticket
almost
prices.
like, gosh, I wish somebody would have thought of that. They should probably call it like hub and spoke or something, you know?
There you go.
God, that would be an
Exactly.
Oh my
excellent.
god, I know a company in Florida called Hub and Spoke.
It's in, I think it's in Delaware actually,
Yeah, I think
but
it's in Delaware.
Oh god
actually.
damn it!
I'm pretty
Fuck.
sure.
Cut that out.
Yeah.
I tried. I tried.
Oh, I just found this thing. That company Genesis, that's a lender. They can't find $1 billion, and
Same.
they're worth like 3 billion.
Like
Oh,
it's
God.
missing, like they're missing
Yeah.
they're missing $1 billion.
Yeah, they say they
Quick
can't
Billy.
find it.
Oh my God.
I'll
I
check
also-
under my mattress later. See
Yeah,
if-
yeah. Maybe they left it at my house. Damn.
I also saw a thread today that I actually sent to Tanner about Coinbase.
Sure.
Interesting, but I don't know enough about that right now, so I haven't really.
Well, I thought it
off the
was
rabbit
interesting.
hole.
So Brian Armstrong, CEO over there, was on the All In podcast. Like, what was it, a week ago, or maybe 2 weeks ago,
was.
I saw
something
clips of
like that. Like right after the FTX news broke, they
He said
allowed him to
something
come on there,
stupid. He
give
said
a
something stupid.
give a little plug. But well, the interesting thing
I
that
thought
he
he
said,
did good.
I thought he did too. Even wore a tie. I mean, what a guy, right?
What a fucking guy.
You know, did you see David Sachs's comment about the red tie he was wearing?
I thought that was so
It
funny.
was so funny. Oh my God. He was like, "Oh, you're wearing a red tie. That makes me think fiscal stability." Well
Yeah.
done, sir.
Everyone laughed so hard.
No,
But anyways,
didn't he
that
say
was not
something
my
about-
point. My
said-
point was
That's fine.
he made the comment that for every fiscal unit that one of your customers has, so for example, if they own 1 Bitcoin, then Coinbase has to have 1 Bitcoin,
Yeah.
to match it, right?
In
If your customer
reserves,
has
yeah.
$1, then you have to have $1,
He
one
said match
tether.
it in the currency that it is.
Correct,
Not
exactly.
Some benchmark.
Right. So like if your customers have, let's just say 1 billion in assets total, you don't have to have $1 billion in cash necessarily, right? You have to
Right.
have 330 million in Bitcoin and 600 million in something else and so on and so forth, right?
Well, that's what the
So-
proof of reserves is.
Yeah, I
That's
just
why-
thought that was interesting. It was a good clarification for people because you hear it all the
was
time.
nice. Yeah.
You hear it all the time. Oh, they don't have cash. They don't have cash. Well, no, they probably don't, right? But neither
That-
do their customers.
Right. That
So it
usually
doesn't
just
matter.
means their customers aren't holding cash within
Exactly.
their platform.
Exactly. So I thought
But
that
that-
was a good clarification. But
What did you think that was bad, Jake?
I'm not 100% sure because I didn't see the entirety of that podcast,
Okay.
but I think he said something about the safeness of your funds with Coinbase. If I'm not, I might be wrong. He may not
Well,
have said
but
that explicitly.
look, just like Robinhood or Charles Schwab or, Fidelity, right? If you're going to be regulated and you're going to be, above bar or at least at the bar, there's always the possibility that your money gets locked up, right? Same goes with Chase Bank and Goldman Sachs and every other, regulated FDIC affiliated, bank and stuff ever, right? For the banks, Charles Schwab and some of those are not backed by FDIC, obviously, but you know what I mean, right? You always run into that problem. So I don't see that being any major unique drawback to being, to Coinbase or to crypto specifically, because, just like they did when AMC and some of those other stocks were trading like crazy, you can buy something and they can not allow you to sell it, right? I mean, just straight up. That's just how it is.
Yeah, I mean,
It's
again,
always a risk.
I've
Always a
voiced
risk.
I've voiced my opinion about Brian Armstrong on this podcast before. I just he not the biggest fan of that guy.
Yeah, I think he's in a tough space. I did like his interview though on the All In Pod the other day.
Fair, maybe I have to go watch that.
Yeah. One last point. I don't know if we can like move this back to the FTX section or if we're just going to close out with this, but Chamath was talking about how so many people weren't doing due diligence. They were just writing checks to FTX.
Yes. Yes.
So I think it's
Tom
like,
Brady, literally.
yeah. So I think it's so wild.
Well, he was saying venture firms, though. I mean, he was talking about like Sequoia's fund, number 3, I think, that was in there.
Yeah.
Yeah.
The emerging fund 3 or something.
Right.
It's just wild. These people have billions of dollars under management are just like, okay, we won in this round. Fuck the financials. And then Chamath said that he asked for the financials and the guy responded in an email with fuck you.
Right.
I thought that was so funny.
Yeah.
And Chamath said that was all the insight I needed to not touch it.
Yeah. Well, it should be, right? I mean, totally.
Yeah. So Chamath is baller for that.
That's so funny.
I'm gonna put this up real quick.
What does it relate to? Because I found the Ticketmaster parent company.
Well,
I was to FTX.
No.
Okay, go ahead.
I wanted to put up this quick thing. I sent this to you guys earlier. This is that Black Friday holiday planning document that was put together by the company Future. And it was just some predictions for how people are going to spend their money and how much money they're going to spend this year. And I thought some of it was pretty interesting. I didn't know if either of you had a particular section of it that you wanted to comment on, but they had some graphs and stuff in here that were really just interesting. I mean, so, for example, this one says 87% of U.S. citizens are either concerned or very concerned about rising costs. It's basic, but so be it, right? But
I see one that I think is kind of interesting. 23% will scale back planned spending on holiday gifts this year.
What page is that on?
9. It's just a chart with a lot of different stats.
Oh yeah.
I thought that was pretty unique as I'm glancing over. Yeah, tough times ahead. My prediction for Black Friday is we'll see a fairly large step down from what we saw last year on online shopping, and we'll see margins be shot for online shopping because the only way they're going to keep people is by having very competitive deals and offers that are not offered in store. So whoever can offer more value to the or perceived value to the consumer through these discounts wins.
I think this is interesting though. Look at this one that I've got 80%. Up there now, right? It says 80% of people say I'm looking forward to Black Friday. It's fun and a great way to get some deals. 76% said I'll make the most of my Black Friday purchases online this year. 72% said I always shop for Black Friday deals. This year is no different.
Yeah, so sort of to my point, sort of counter to my point, I would say it's 50-50. But I'll make the most of Black Friday purchases online this year. 76% of people said that. I'm seeing a lot of companies do like 50 to 60% off on these products. And the methodology behind it is that once they're on the email list after a purchase, they will be a more sticky client. Once they follow the Facebook page and Instagram page, they'll have them as a potential client at regular prices, which is possible. But the landscape for productized or anything that's a productized asset is getting very competitive. Like if you're not making a really, really strong brand, you're getting left in the dust. So you can only have so many things on your feed that you're like, wow, I bought that during Black Friday. I remember it and I want to purchase it again. Most people are just doing it for Christmas. They're going to buy their things 40 and 50% off. And then that's that. Fuck your brand going into the new year. I'm probably going to unsubscribe from the email list type shit.
Right.
So that's what I would see with that 76% or that slide you shared.
Yeah, I just think it's interesting. I don't know. It's it doesn't add up to me. This is a perfect example of it, right? Because if you just think about what we just said and about some of those stats, how, basically we'll go with most people, I think it was like 84%, right? We're concerned about raising costs, rising costs rather. But yet, how many people will have the same amount or more money to spend this year compared to 2021? 20% of people say we'll spend more on the holidays, and 19% people say we'll spend more than we did year over year
Yeah, I don't
on
know if I buy
Black
that.
Friday specifically.
Oh,
If you count the holiday season as now onward, I would say that the statistic of more is true. I think Black Friday's prominence is a little bit larger, as I said, because of discounts. Though, if there's not that allure of discounts and people thinking that they're saving money while receiving a lot of value, then that's shot. But it's becoming hard to be a brand that sells a product because you have to have your Black Friday sale a lot of the month of November. December, you got to have a discount going into Christmas, and you have to have like basically the whole month leading up to Christmas with shipping times as a discount. So you have 1/8 of the year. So like 12.5%, which is not that much, but that's, I mean, 10 to 12.5% of the time where you're not getting your regular product revenue. So, and you're getting a lot of your purchases. So then people use that product. It takes them a few months to run out and then feel the desire to re up. So I think it's just not good for the small to medium sized business. Maybe some of these larger corporations can eat that lower amount of revenue because everything's shrinking anyway. But yeah, that just goes to the point of that Duns and Bradstreet business credit and business viability set of statistics. So yeah, just be wary as a small business how you're doing your discounts. Provide a lot of value through community instead of shooting yourself in the foot by having 50 to 75% off your merch or product just to get it out. That would be my take.
Yeah, I would agree. I don't think it's the right environment to be losing margin going into.
Yeah.
I would be very cautious.
absolutely.
Yeah,
But
so online sales,
if
that's my
you're,
prediction.
it
Way
depends on
less
your business,
profit.
right? If
Definitely.
if you've got too much inventory, then that's not good either. So maybe it's a good opportunity to dump some inventory and take some cash, just liquidate a little bit to fortify that balance sheet just a tad,
Yeah.
make it slightly more liquid.
Yeah,
So
you just have
just
to be
depends.
careful of your
What's your
exact
turnover?
situation. There's nothing. It's not black or white ever. So
No, not at all.
last thing. So this will be the edited part. It'll load. Lord.
Gotta get better Wi-Fi, Austin.
Well, I have my screen turned. I'm trying to find the. Okay, so Ticketmaster's parent company is Live Nation Entertainment, and SeatGeek is a competitor that is not owned by Live Nation Entertainment, which controls 60% of the market. So definitely a good alternative if you can get your tickets and things for entertainment related events over there at SeatGeek. Not a free promo, just
no free promo.
no free promo. Send us an email. We'll get you our budget sheet over. But yeah, that's that. So cut. And then what did I say before we outro with the Black Friday thing? So now I'll do the outro. Everyone, thanks for joining us on this episode of Luck of Effort. Nick, we missed you, but guys, I think we handled it really well. Got a lot of good topics talked about. We hope everyone has a great Thanksgiving weekend with your families. And guys, I hope you have a great weekend as well. Till next time.
Happy Thanksgiving.
Awesome.
Everyone.
Happy Thanksgiving.
Be on the lookout for CNM episode, probably within the next week or so.
Awesome. Any more plugs? Kyle, you got a plug?
No, not
That's
yet.
right. No free promo. That was a trick question.
Plug myself.
There you go. Whoa, what?
No, why'd you make it weird? Why'd you make it weird?
Because that was on the outro. We can delete
Why'd
that. I
you
just
make it
thought it was
weird? Why'd
funny.
you make it weird?
Hey, that's what I'm here for.